Hello and welcome to Kemet Capital, the community of holders and seekers of African capital. I'm your host, JS, and before we begin, guys, we already know we start with our word of affirmation, our guiding principle. It's the Cobb and Douglas function, guys. On our way to make Africa great again is through economic strength, economic power. And in order for us to achieve that, it's through increase of output, through efficient allocation of capital and labor. So the uh, topic of today's reaction pertains to the total factor of productivity, which is the change in output, not from input. So, guys, today we are going to react to this interview from Dr. Mishek Mutiz, and let's see what it's about. Let's jump in.
African countries are ambitiously looking to shift towards having their own credit ratings agency in a bid to tilt attention on the financial market space to tap domestic capital in local currency as the risk of foreign currency exposures persists. While I spoke exclusively to Dr. Mishek Mutize, and here's more.
Credit.
Okay, guys, so before we start, Mishek Mutize is a Zimbabwean economist and finance expert specializing in sovereign credit ratings, finance, and African economic policy. He currently serves as the lead expert on credit ratings at the African Union's African Peer Review Mechanism, where he provides technical support to member states on issues related to international rating agencies. He holds a PhD in finance and a Master of Science in Finance and Investment from the University of Cape Town, and uh, his academic work focuses on credit risk, sovereign debt, and the governance of state-owned enterprises in Africa. So, a really expert.
Credit rating agencies are not just important for
Excited to
African
hear from
countries.
him.
They are important across the globe because they are a key function or a key part of the global financial architecture as a whole. So, where they come in is when investors are holding on to money and they are looking for where to invest and considering how much to invest at. They weigh the risk versus the return. And
Mm,
one of the key input into the assessment of risk for investment is a credit rating. Because when a credit rating assessment is done, it gives some frame of risk, a sense of risk that investors need to be able to input into their rating models or into their investment models.
All right, guys. As you already know, as an investors, it's critical for you to know the type of risk that you are engaging to set the appropriate level of return. So credit agencies are critical in the financial infrastructure of any countries. And um, in my opinion, we need to develop our infrastructure. We already in this community made a video about that, and those are these credit ratings are some of the institutions that are the fulcrum that we need to pioneer in Africa in order for us to attract more capital and also retain that capital.
To determine a cost of capital in the form of interest. So that's where the ratings becomes very important. An
Hmm.
investor can't make a move before they know the real risk of the instruments that they are investing in. And in Africa, why they have become an issue because when the global financial architecture was tilting from the traditional framework of donor financing into Africa towards the Eurobond market. All the governments that wanted to tap into the financial market, they needed to have a rating for them to be able to do so. That's why you see there was a spike in the increase of a number of countries that were having a rating around 2002 up to now, where we have about 32.
So as per Mishek, so basically before we were we as Africans, we were relying on donors type of capital, and African countries started to, rely more on financial or capital markets, and to get into the game. to be on the field, you need to have an assessment. We need to know if you actually have the skills to be able to play with us. And that skill, in terms of when we're talking about finance, are you able to? What is your ability to repay my debt? And it's through a credit rating. And on top of that, if you're borrowing on the Eurobond market, that means you need a Eurobond type of credit ratings. And those credit ratings are the big guys, the Moody's, the S&Ps, and so forth. And as you already know, when those guys are looking at African country, the entire bucket it's probably lower than investment grade.
to African countries rated.
That you bring this up, and Dr. Looking at this conversation around credit ratings, we've seen most countries are unhappy with how the global rating agencies do uh, categorize them. Perhaps what should be the way forward for African nations going into this new decade?
I mean, the credit agencies, they're just doing their job. They look at the data and they input the model, the data into their model a rating. The issue now for us is actually how that model is created. Do we need to adjust the model for, specifically for African, economies and countries? Because those models are developed for developed nations. And that's actually why the framework of having an African credit ratings with an African, framework or methodology will be critical for our development.
Where countries are saying we need to have our own rating agencies that are able to profile our issues at home.
Sure.
Yes, that's very correct. That there's been a concern on the trend of rating across in Africa,
Mm.
because generally the rating has been declining over time. When we had 8 countries in Africa rated investment grade, and now we only have that are actually sitting on the fence to be downgraded into the sub-investment grade or junk state.
So basically, all African, sovereign bonds are junk bonds. This is unbelievable, but it's the reality.
So that's why you see this conversation was ignited at the assembly of the African Union level to say we need to look into this matter at a very technical level. So our discussion started on how we can both support the African countries together with their corporates to improve their ratings with the big rating agencies. At
Hmm.
the same time, we
And this guy is critical because he's an expert in credit ratings. So if you hire him as a consultant, he's going to tell you exactly what those Moody's and S&P models are in order for you to give you a great rating. So it's up to you to implement those policies that he will be advising you to do in order for you to raise your credit rating.
also need to bring the conversation on how we can shift where the exposures that has led to the majority of downgrades has been more pronounced, which is the Eurobond space, which has also seen a lot of weakening in terms of declining foreign currency reserve, because these countries are borrowing using foreign currency denominated instruments.
Yeah, you're borrowing in euros, so you need to pay your lenders in euros, and it drains your foreign exchange. And as we already know, the strength of a central bank is the amount of foreign reserve he holds. If all of your foreign reserve are just fleeing the country, paying back sovereign loan, you're gonna have a weak bank and at the same time a weak economy.
So now we are shifting the attention and focus into the domestic financial market space. That
Exactly.
even if there are global investors that are looking to have interest in African instruments, they must consider these instruments in domestic currencies so that we eliminate the foreign currency risk exposures altogether. That's when the conversation now of having African-based rating agency is more pronounced.
Wow, this is huge because he's completely right. We need to have the capital come to us instead of us going to look for the capital. the agency, African credit agency, foreign lenders or foreign holders of capital can look at that African credit agency if it's believable, if it has enough, backing and support, and be like, okay, I can invest, let's say, in Kenya based on this rating because the African credit agency knows the market, the model, makes sense, and so forth.
So the discussion of having an Africa credit rating agency is number one to try and educate the market about the importance of shifting focus to African-based instruments and
Hmm.
also to educate the market on the importance of having a rating in the first place.
Yeah. But guys, it's not going to be a walk in the park, right? A rating agency, it's a big endeavor. You need an institutional trend, you need a strong mandate, you need, governance, independent and credible board members. There's so much that you need. You need a strong methodology for the rating. Your rating methodology needs to be transparent. It needs to be, standardized. It needs to be, context sensitive as well. The human capital, you know, you need the multidisciplinary experts, you need the local presence, you need regulatory and international credibility, because if someone like Moody's or S&P doesn't or gives you a completely different rating than what you've assigned, you're going to lose credibility, and it's just going to hamper you know, this endeavor that we're trying to do with having a credit agency specifically for the African continent. But you also need financing because it's a startup. So you need funding for operations, you need research, salaries, and IT systems. We already know in the digital age, IT, it's critical, especially for an institution that will handle that amount of data. We're talking about sovereign nations, so it's not going to be a walk in the park. You also need like continental, participation and integration, as I was saying. It shouldn't be the case where Moody's rates a country like triple A's and us. When I say us, our credit rating come and gives like I don't know, a junk bond type of level. So it needs to be some sort of integration, and the technological platform is also going to be extensive. So a lot a lot a lot of work to be done before we get there, but this is a great initiative and it should be encouraged for sure.
As a way of strengthening the corporates and sovereign balance sheet and fiscal position, and also improving transparency in how they implement their fiscal strategies.
Hmm.
One of the key initiatives that is actually underway is the establishment of the Africa Credit Ratings Agency, and this is a bold initiative.
Yeah,
We have seen a couple of leaders in
very
Africa
bold.
talk about it, and at the same time, we haven't seen much legwork going into this. Perhaps
That's the thing, guys. If you watch the maybe the last 5 videos, we talk about Africa being, you know, a lot of talk, not a lot. Talk, bark, no bite. We talk a lot. We're always behind the microphone talking about policy, talking about what we can do, but we actually not implement the policy that we're discussing. The policies are looking good. They all look good on paper, but the real work is to implement them. And in every action on the continent, it's always the implementation that's the issue.
give us an update. How far is this? Is it likely to gain fruition anytime soon?
Yes, actually, we have minimized our interaction with the media with regards to that project because of some of the activities that might prejudice the process. So there is actually a lot of work that is going on currently in the background,
Hmm.
where we are already in the process of setting up this institution. But as you are aware that the fundamental foundation of this institution to be relevant and useful to the market is to have it established as a credible, independent, and private sector driven entity. So
Exactly. Credibility is key. You know, you cannot assign um, a credit rating to a sovereign nation without that will be,
we are actually in the process.
and it will come from the leaders, it will come from the partners, the backers. people that will invest in the equity of the company. So big and it'll be very fruitful
of securing
if it
the
comes
right
true, of course.
shareholders that will give this institution a strong balance sheet through the
Correct.
financing and also credibility in terms of having the right people and right faces
Correct. Right
associated with that
governance.
entity.
Correct.
So we are quite advanced. That's what I can share with you. In the process, having appointed a transaction advisor and a network of a strategic and technical partners that are supporting both the African Union and APRM into the setting up a process. So let me use the opportunity also to clarify that having an Africa credit rating agency does not mean that African governments are going to have rating upgrade from this institution.
Correct. We're still gonna follow, rigorous methodology. If your sovereign bond is junk, we have to rate it as junk. It's not because we're doing like, quid pro quo. It has to be straight, it has to be reliable, it has to be sustainable, it has to be, transferable. And the way to scale the model is giving him the same amount of data or the same type of data and expect the result that you got before. So in terms of model testing and so forth, it'll be critical.
The main objective of why this institution is being incubated is to have or to bring some benchmark on accuracy of ratings
Correct.
from a perspective that we are developing a context intelligent methodology under the African Credit Rating Agency, as well as other African based rating agencies that are already in the space and are rating corporates quite significantly. For your information, in Africa, the big three, none of the big three is the largest rating agency in terms of portfolio of rating. It's
Wow.
actually the Global Credit Rating Agency, which is
Wow, that's huge. I didn't know that. I thought Standard and Poor's, Moody's, and Fish were the big three in Africa, as Dr. Mishek is. In terms of volume, instead of transaction volume, there's actually African players that are doing the job already. I didn't know that.
an African based rating agency, although unfortunately it was acquired by Moody's a few
Ah,
years ago.
but still, we
So
still have the
this is where
we still it's still good because we still have the human capital that is African. We still have, I'm pretty sure, the leadership, even if the financial capital. We're still developing that expertise that will help us when we go independent and private in the future.
we are driving it to develop this institution as a key catalyst in bringing more attention to the corporate and sub-sovereign space.
Be huge. Wow. Great interview from Mishek. Very knowledgeable guy. Dr. Mishek. My apologies, Doc. Oh, great insights from this guy. What do you guys think? Do we need a credit rating agency? Do you guys think it'll work? In my opinion, we need it. We need to develop our financial architecture and infrastructure, and credit ratings is one of those institutions. So I'm all for it. I wish those guys all the success, and I hope it becomes fruitful in the near future for our capital market. All right, guys, you let me know what you think in the comment. I enjoyed reacting to this review to this video. I enjoyed the hints, the insight that Dr. Michel provided, and the great questions from the journalists as well. And from there, I'll bid you goodbye and see you the next one.